Hello, this is Victor Cuevas, and today I'm going to talk to you about Index Universal Life and Whole Life. When would you use them? What clients are appropriate for an IUL and what clients are appropriate for Whole Life? Now, this is a very, very important video because you'll see a lot of stuff out there on YouTube about infinite banking and about Index Universal Life. And you've got the Whole Life guys are saying IUL is bad, don't go there. You got the IUL guys saying Whole Life is bad, don't go there. And the truth is that the Whole Life guys saying that are people that have no experience in Index Universal Life. Now, in the past, I've made some videos anti-IUL because in the past they warranted. But I did it because of my experience, which I'm going to explain in a little bit. The guys on the IUL side, I will tell you that the vast majority of them, almost all of them, haven't written any Whole Life, don't really know about Whole Life other than what they hear from sources that are uninformed, and never have done an illustration or anything like that. Now, when it comes to me, I've been in this industry for 25 years. I've written every kind of insurance policy you can think of. I've been in the securities industry for many years. I was fully licensed. I was a fiduciary. I received a fee for my financial advice. I've written literally thousands of insurance policies. In my best year, I delivered 152 policies in 1 year. Most of those ULs back in the day. I was rescuing universal lives that were written back in the 80s and in the 90s. And they were all falling apart because the interest rates, on those things went from 9% down to 6%. So they were all crashing and burning. So I made a good living just rescuing ULs. I transitioned in 2005 when I became self-employed. I wrote a lot of IULs when they started really coming into prominence. Got a lot of training, wrote with different insurance companies. And then made great money, big cases, $100,000, $200,000 cases, premium going in. 2008 hit, and what did we see? Everything crashed and burnt. I had a rehab business going at the time, was doing great guns with it. That went out the window. Interest rates dropped like a rock. Over the next few years, what did I see happen to all those IUL policies that I wrote with the S&P 500 index with caps around 15%? Folks, caps went down to 6, 5 3/4, 6 3/4. What do you think that does to an IUL? When if you know anything about an IUL, the first 10 to 15 years are critical because of the higher fees, higher cost. So I stopped writing IUL. And I kept watching it being sold all the wrong way. Guys going on the YouTube saying all kinds of things about IUL when I'm seeing what's really happening in the industry. So I've kept track of it all these years, and I transitioned into Whole Life. And I trained as an infinite banking practitioner. I went to the Infinite Banking Institute, studied under Nelson Nash, the founder of IBC, and his crew. Nelson Nash has passed on now, but I studied under those guys, and I started writing Whole Life, and I got a lot of Whole Life business under my belt. And so I can come to you from a whole different perspective, because I've written literally thousands of insurance policies in the last 25 years. And I've written term, I've written universal life, I've written Index Universal Life, and I've written Whole Life. I have a lot of experience with all of them. So I can tell you from years of experience and looking at the statements, when you should use IUL, when you should use Whole Life, and the pros and cons of both. So this is a 2-part video series. The second part is going to be an illustration, a real person, and an illustration with Whole Life, and an illustration with Universal Life. And you IUL guys are going to be blown away by what you see in that Whole Life. And you Whole Life guys are going to be blown away by what you see in the IUL. So all of you can learn from me and my experiences, good and bad, And you clients out there that are thinking about cash value life insurance and which way to go, you will learn a lot as well. So let's go over some notes here. Let me get my glasses so I can actually see what I'm doing. Two choices for cash value life insurance. The two main choices. There's variable universal life, which is all your money in the stock market. Don't go there. Bad stuff. I never sold it. I knew better. But we're looking at universal life isn't bad, but it has its purpose. But most of the time, it's either going to be whole life or index universal life. So whole life is used for infinite banking or becoming your own bank. It's also used for tax-free income. It does pay a tax-free income. Not as much, not even near as much as IUL can pay, but you can use for tax-free income to supplement your income and retirement. But it's for becoming your own bank. That's what whole life is for, properly structured. IUL is used predominantly for maximizing tax-free income. It can also work for infinite banking, but more so in year 3 and moving forward in the policy. Now, the reason why IUL is not appropriate for infinite banking is because of the surrender charges. You could drop $25,000 that first year into an IUL and have $2,000 available to you to borrow from because of that surrender charge. $2,000 to borrow from after you drop $25,000, that's ridiculous. No, it's not a banking. You don't use it for banking. Whereas with a whole life, I can drop $25,000 and have $21,000 available right there for banking. You've got an instant bank. And you'll see in this part 2, $25,000 going in for 4 years, $100,000, and in year 4 you have a little more than what you put in year 4. You can never do that with IUL. You can't do that with whole life if it's properly structured, and that's where you IUL guys would be completely blown away when you see it. So please, you IUL guys, don't make a video and say, hey, you can use it for infinite banking. Yeah, you can drop money in there and immediately start borrowing a bunch of money from it. You can't. You can do a 1035 exchange. You can do a $50,000 1035 exchange and put in another $20,000 that a year out of your pocket. Yeah, you'll have a lot more, but that you can borrow from, but not near as much, not even close as much as you would have with a whole life. So it's not used for banking. Also, whole life goes up every year guaranteed. It's just going to go up every year. Your bank continues to grow. You don't have that guarantee with IUL. All right, IUL is predominantly for maximizing tax-free income. It can also work for infinite banking, but a few years down the road. So, whole life concentrates first on warehousing wealth for banking purposes. If you want to drop money into a cash value policy and warehouse it, bills and bills and bills and bills, never can go down. You never can lose a penny due to cost in the policy. You know it's going to keep going up every year no matter what. You can stop paying on, just forget about it, and it's going to go up. It'll never lapse on you. Whole life is the way to go. So whole life concentrates on warehousing wealth for banking purposes, while IUL concentrates more on max cash accumulation for tax-free income long term, with lending as secondary. The big deal here with IUL is long term. Okay, a whole life you can drop money for 3 years, go reduce, paid up, and you're done. That thing just grows and grows and grows with no cost coming out of it. You can borrow against it as your bank for the rest of your life. Okay, you can't do that with IUL, right? Because you're always going to have costs coming out of the IUL. So you have to be careful with it. So that's why IUL is max cash accumulation for tax-free, and it's a long-term instrument. IUL will always create more tax-free income than whole life. If you do the IUL the right way, you have the right company, the right indexing, and it's designed the right way, and you're with a company that keeps the cost down, not some of these weird asset charges and these other things that they throw in there to juice up the crediting, but then the costs inside are bad. It illustrates well, but it ain't gonna work that way. I'll guarantee you. So you got, if you got to know what you're doing, but if you do IUL the right way, and you'll see that in my next video, it can work really well. It really can nowadays. It can really work long-term, 15, 20 years down the road for tax-free income. So which way do you go? If you want to get out of debt, starting right away, then you really need and you really need the banking aspect. So you really need to get that banking because you want to get out of debt. Then whole life is the way to go. Do not, folks, do not tout IUL as a way to get out of debt. That's wrong. It's unethical. It is not the best instrument to get out of debt. Whole life is hands down the best cash value policy to use for getting out of debt, using the debt snowball and getting out of debt. IUL, horrible for that. Horrible for that. Okay? Can prove that, debate that all day long. That's a no-brainer, slam dunk. Whole life is best for getting out of debt, not IUL. So if you want to get out of debt, whole life's the way to go. Or if you have a large sum of money to begin with, and you will be adding more each year for a while, say 5 or 10 years, so you can fully fund that bank because you got some plans, and you want to use it for real estate now or capital improvements in your business right away, then whole life may be the way to go. Because you know that money is going to be there. It's going to be there. Most of it's going to be there right away. Within 4 years, 5 years, you'll break even. That money is there. It's growing. Bam, bam, bam. You warehouse it. You can start borrowing from it. You can do whatever you want to. That's the way to go. But if you have money on the sidelines and you want to fast start a retirement plan, or you just want to start a monthly contribution retirement plan now, and you don't need the banking right away, then IUL may be the product for you. So if a business person comes to me and says, Victor, look, I've been building this business for the last few years. All my profits I've been, just putting right back in the business. I haven't been taking a lot of money out for myself. I've been depriving myself, but now the business is good, it's strong, it's cranking. I'm living a good lifestyle. I don't have a lot of debt, and he might be 45, 48, 50. So I really need, I'm looking at 15, 20, 25 years down. I really got to crank it up right now so I can retire well. And I've got 3, 4, 5,000 a month that I want to start dumping into this thing. Or I just sold something over here and I got 100 grand. Plus I want to throw in another 15 grand a year. IUL's looking pretty good for that. It's looking pretty good for that. So there is the, or you might have someone out there that's working for a company as an employee, making good money, but they don't have a retirement plan. And they say, Victor, I've got $1,000 a month I can put away every month for retirement. I got $500 a month I can put away. And you consult with them and they're good for it. They got low debt. They've got a rainy day fund already. Because you don't want them starting an IUL because I can barely scrape together $300, Victor. Can I do IUL? Oh yeah, man, let's come on. Boom, and they start throwing it, and you haven't even looked at their financial situation that well. And a year and a half later, Victor, I can't do this anymore. They're in trouble. Okay? They're in trouble. And that's what a lot of that's happening out there. But if you got someone that's making decent income, their financial house is in pretty good order. They tell you I can do comfortably 500, and you look at their financials, and you're confident they can do 500 comfortably. You never know what the future, but they're starting out strong. IUL could work great for them. Okay, IUL can work great for them. So that's it, folks. That's the introduction, part 1 of 2 choices: cash value, IUL, whole life. Which way do I go? Infinite banking or Index Universal Life? This is it. Please go to part 2. You will learn like you never learned before, the pros and cons of both and how both can work. All right, this is Victor Cuevas, Victor for Advice. God bless.